Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation. James chapter 1, verse 12. Blessed is the man who remains steadfast under trial, for when he has stood the test, he will receive the crown of life, which God has promised to those who love him. Philippians chapter 4, verses 6 to 8. Do not be anxious about anything, but in everything by prayer and supplication with thanksgiving, let your requests be made known to God. And the peace of God, which surpasses all understanding, will guard your hearts and your minds in Christ Jesus. Finally, brothers, whatever is true, whatever is honorable, whatever is just, whatever is pure, whatever is lovely, whatever is commendable, if there is any excellence, if there is anything worthy of praise, think about these things. Romans chapter 8, verse 31. What then shall we say to these things? If God is for us, who can be against us? Romans chapter 8, verse 18. For I consider that the sufferings of this present time are not worth comparing with the glory that is to be revealed to us.
Good morning, everybody. Hope everyone's doing phenomenal. Okay, Sunday, praise God. But yeah, we have a lot to discuss today, to be so honest. I've gotten a lot of questions about the process. of just like bias and narrative, even though, we kind of do it every single week. So I figured I would try my best to get like like an organized little like PDF we can go over. So yeah, how's everybody doing tonight? This morning. Morning, Mike, Hitman, Tony. The usual suspects. Okay. Yeah, how was your guys' week last week? Was it good? I never seen them do what they did last week, by the way, with NFP. I never seen them have it and then move it to the next week. I've never seen that before. Very odd. Hey, appreciate whoever subscribed just now. Matthew, appreciate you, bro. Let me see. Last week was wild. Patient got punished. Hey, Tony, it's okay. It's kind of just how it goes. Sometimes it's going to be that way. I did get stopped out a couple times last week with my private group. But yeah, it's very strange what's going on with the NFP situation. I think it's because the government shut down, right? I think that's what they used to kind of bump it to the next week or something. Never seen that before. This is my first time trading an environment where there's a government shutdown. So we'll kind of see what goes on. There'll be some things that probably can't happen until they figure out how to stop being at each other's throat. So yeah, we'll see together how this whole scenario plays out. Just a reminder, don't forget to like the video if you guys like the content. Subscribe to the channel. Appreciate you, Matthew, once again. But yeah, we have a lot to discuss today. So to get started, obviously we start with the news, right? We have no news Sunday, Monday, or Tuesday. So when there's no news, what's the automatic assumption in terms of condition? Or what should we anticipate automatically when there's no news event? What is ICT taught? Can you guys let me know in the chat? See if you guys remember. Range, consolidation. No direction. Yeah, essentially low probability, right? Would you guys say that? Low probability. Why? Because in terms of one-sided delivery, we need institutional sponsorship. What have I said about the news events and how they relate to the higher time frame? What does the news events do for the higher time frame? Do you guys remember what I said? Like, how do they relate to one another, right? Let me see if you guys remember. This is a very important element to using the news with your analysis. Do you guys remember what I said? How is the news utilized? Okay, liquidity, Mike said. What else? In terms of liquidity, like what in terms of the liquidity, right? Like, what does the news do for higher time frames, right? Or just overall narrative, right? Like, what does it do? If you guys don't remember, that's okay. Make sure once I tell you it, you're going to want to write that down, right? When I tell you guys what it is, if I don't get a guess. Pushes towards what sentiment? Okay, that's close. That might actually be the answer, actually. but I would have said it a little different, right? The news helps with timing for the higher time frame delivery, right? Like if we have a higher time frame that was one-sided bullish, okay, and price looks like it may be topping to start a retracement, the news basically schedules institutional sponsorship. So if we're going to pull back like into a fair value gap on the daily chart or weekly chart, and from that level it's going to run higher again, the move towards that fair value gap or order block or whatever internal range liquidity is available, the move towards it is going to require institutional sponsorship. And then the move away from it is also going to need institutional sponsorship. This is the excuse that they use for the higher time frame delivery. So to deliver to a PD array on that higher time frame and away from a PD array on that higher time frame, to either reverse and give like a retracement or to give a continuation, timing that is going to be heavily influenced by what the news has available for us, right? That's why, if you noticed, a lot of significant news events happen on Tuesday, Wednesday, or Thursday, sometimes Friday. And that does what? A lot of times that'll trigger TGIF, right? If there's a reasonable level to target and it's been one-sided through the week, like last week, right? It was basically a TGIF, right? There was supposed to be a news event that was big, right? NFP, but they decided at the last minute to push it to this week, right? So yeah, hopefully that makes sense. It's a very, I guess, very under-known or relatively not known way of using the news. Obviously, I didn't find this out by ICT saying it. He never said, oh, the news is a timing tool. He never said that. What I discovered, though, was when big moves take place towards some form of liquidity or internal range, PD array, or to an external range high or low, depending on what the narrative is, it required a news event to then push from that higher time frame. And the more solidified I got with the importance of the higher time frame, I started being able to put those two things together, right? So now you guys know, right? And if you guys are early in your learning, that's a pretty helpful tool, right? Pretty helpful way of looking at the news, and a pretty strategic way of being able to time higher time frame moves, right? And put yourself in line with when it's going to deliver, from a level or to a level. Like if there's news on like Monday going into Tuesday, but then there's a heavier news towards the end of the week, you could see power 3 just forming, like just visually you could think about the news forming the power 3 or assisting in the volatility injections required for the manipulation and the distribution, right? Sunday, Monday, just a reminder, right? Consolidation, manipulation for the most part. Sometimes it bleeds into Tuesday with the manipulation to set the high or low of the week. Tuesday, Wednesday, going into Thursday, right? Tuesday, Wednesday sets up the expansion for the weekly candle. Thursday, going into Friday, if we're hitting a PD array after price has been one-sided prior to Thursday or Friday, and we hit a PD array, generally, if there's a news event, price will want to pull back. Very similar to what we saw this previous week. When we get to the chart, you guys are going to see that visually a little bit later on. Right, but this is like the baseline view of what we're going to always go into every single week looking for. Some of you guys, this is probably a reminder, probably most of you guys that are on with me right now. But it's good to continuously repeat your process to yourself over and over and over, because there's so many things when we're learning that could get in the way of us focusing on what's truly important, and then having an organized process. So hopefully these Sunday calls have helped you guys be organized, and hopefully seeing how often this stuff plays out, how correct we've been on the higher time frame overall. It's undeniable at this point, right? So hopefully you guys have been taking good notes. And again, if you haven't written down the view on the news, like I just said, with what we just talked about, it's highly recommended that you do so, and then start watching this take place. Because now that you know or have an idea of what I just talked about, when you're looking at price and looking at a weekly range or even a daily range, you're going to now know why it's so important to wait for the news. You got to wait sometimes, a lot of the time, right? Like a big portion of the battle is being able to wait and not rush yourself, and then take bad trades and then, have to deal with the issues related to that, right? But yeah, so Sunday, Monday, Tuesday, low probability. Sunday is always low probability, right? Monday, it's within the manipulation of the weekly range. So, sometimes it delivers, sometimes it doesn't. So Mondays and Fridays trading, you cut your risk by half no matter what. At least that's what I recommend. Tuesday, Wednesday, Thursday should be the heaviest volume of trading that takes place. If you're taking 1 to 2 trades a day, if the opportunities are there, you should by the end of the week only have 10 trades that you've engaged, right? And if you think about journaling, 10 trades is not too hard to journal, right? If you're taking 5 trades a day, 10, 20 trades a day, you can imagine that those same people are not going to journal at all because they can't. They just can't. It's too much work. So you want quality over quantity. And, there's so many opportunities. The question is, can you identify it? And is it within your model? And is it within something that's repeatable? Okay. So, yeah. Wednesday, all right, we got FOMC type of conversation. Unemployment, I don't know why we got 2 unemployment claims. It's kind of strange. What's the difference? Release date, delay. Oh, wow. It's going to be a lot of shenanigans that take place, by the way, because of the shutdown. Remember, they don't ever let a disaster go to waste. The powers that be, whether it's war, whether it's catastrophe with a pandemic, or whether it's, some type of attack on a country, whether it's a government shutdown, or a recession also. They always use these things as reasons to make change or do some crazy shenanigans, right? So we do notice that FOMC conversations happening. FOMC minutes is not really, it shouldn't be looked at as NFP or the normal FOMC. It's a lot less volatile, if it's volatile at all, right? But yeah, we have Fed speech and then we have non-farm payroll. So it's going to be a lot of fireworks probably towards the end of the week. I wouldn't be surprised if they build sentiment the first 3 days, not really do much, and then maybe give us a Thursday reversal or maybe a Wednesday low of the week reversal or, something like that. I don't have a high expectation for Sunday and Monday and Tuesday. Sunday, I never have a high expectation. Monday and Tuesday, like I said, I have no news, so we'll be pulling back on the aggression, okay? I will have a live call here on YouTube on Tuesday, but again, we're going to, got distracted by the date right there. But we'll see what happens, right? Doesn't mean there's no trades, right? Doesn't mean that something won't happen, right? Doesn't mean that volatility won't be there. It's just be ready for it not to do anything, right? Until the latter portions of the week. There'll be plenty of opportunity within here. And then after NFP, I'll be trading with my private group. But if you trade during days like this, or even Fed speech days, you're going to want to trade 20 to 30 minutes after, minimum. And then keep in mind the liquidity list that I give you guys for the liquidity mapping process. That's in the free Discord and it's in my private group. Once these news events come out, 20 to 30 minutes after, you want to look and see on that list what's still available, right? And of course, the different PD arrays that may be available as well, and whether we've blown out something on the higher time frame or not, or if we're headed towards one of those higher time frame levels or not. And then if the opportunity is there, see if you can't take advantage, right? So yeah, with that out of the way, that's kind of the landscape we're looking at, expectation-wise for the news, what the overall market profile could be, slow the first start of the week, and then towards the end of the week, we will see some fireworks of some kind. So keep your focus there, right? So moving along, let's go to the monthly chart. Actually, I got something that I want to do before we talk about this. Since it is the start of the month, we're going to look at, if I could find it. Where did it go? Okay. Took a glance at COT. I made this pretty easy to kind of view. Whoops. Don't know why this is kind of being sporadic. Whoops. So yeah, if we take a look at the COT here, remember, when you're looking at COT, you want to look at obviously where price is headed, where it's been, where it could be, going and whatnot. But you also want to pay close attention to the relationship you see here with the open interest and the COT line. The range you see I've outlined here, that's pretty much the last 6 months extreme between the high and the low of the COT data. That gives you your true zero line. Sometimes it perfectly aligns with the real zero line. Seems like that somewhat is the case for the NASDAQ, or for the Dow, I mean. And the NASDAQ, you can see the supposedly real zero line is way up here, but the last 6 months high and low is here. So the adjustment to really be able to read where the real zero line's at for the COT data, you have to do this little process. So the importance of this range here is you can now start to classify when price is in a buy program or a sell program relative to whether it's above or below the zero line. Okay? And this is basically what you want to be able to look at. Like when you've done this for so long, like I have, I don't have to do this. I can already just see it by looking at it. But these quadrants, right? This is the larger, longer term buy or sell program identifier. And then this is the more near-term, month-to-month type of, buy or sell program identifier, right? Again, it's not a be-all, end-all. It's not something that just, that you look at and then it's going to change everything. But it's something that we have to do before we do our analysis to get a fundamental sentiment read before we get into the bonds and yields, which is another fundamental sentiment read as well. Aside from seasonality, which we already talked about it, right? We talked about it last week. I think I mentioned COT last week too, potentially, or the week before that. But this is just a good reminder. So longer term buy and sell program identifier, last 6 months range, find the zero line, high and low. If it's above the upper, portion of the 50% line, the new one that you create, or potentially in a buy program, or it may start to turn into a buy program, right, or a sell program, right, depending on what's happening, if it's above or below. And then these smaller quadrants, by breaking it into quadrants like we do with wicks and stuff like that, right, you can see the upper 50% and the lower 50%. The lower portion of these, upper and lower ranges, if price is hanging around down here, for example, and we're below the zero line, and we see this bearish signature in here. Can you guys see that? Yeah. If you see this bearish signature, price is below the zero line from the last 6 months. We're in the lower quadrant, and we see this little signature in price with the open interest, right? The rise in open interest and the drop in COT, which ironically, it's what we're seeing here. We're also below the upper quadrant, right? If we're below it, that can mean we're in a potential short-term sell program, right? Or it may be coming, right? If it's not manifesting in the chart. It's pretty interesting how, what we've seen recently with the NASDAQ, that pretty large drop, what did it create? It created a sell program. If you look over here at the NASDAQ, right, we got somewhat of that characteristic, but honestly, I've noticed that if you see it in one of the three, like this, for example, since they all follow each other, it's going to have an influence, right? It doesn't have to have all three of them showing these signatures in price or in the COT data, but it can give you a good read on what's to come or justify something that's, taking place, which, maybe you got ahead of it, maybe you didn't. But this kind of just manifests and tells you the future sometimes. But again, it's not a be-all, end-all. It's something to support a particular idea. Like if the NASDAQ is going to take a nosedive and we're going to get a little bit deeper to cause us like a little retracement and whatnot, we can kind of see the Dow's kind of showing us that could be loading up. What is that? What does this mean? What does this bearish signal mean? And what does this bullish signal mean? Like what is happening, right? Well, if it's the bearish signal and we're going higher, that's showing you that smart money's offloading their buy positions, right? At least in some short-term fashion. That's the importance of what we're looking at here, right? That's what you're identifying when you're looking at COT. Most people don't have the slightest idea what they're even looking at, and they don't use it because of that, right? But this is, again, a good way to identify whether smart money's taking profits, right? Or unloading their buy or short positions, right? And again, if price is going higher and you see a bearish sign like this, right, the little signature in the COT versus the open interest, if you start to see reasons for price to decline a little bit, maybe because we're at all-time highs, maybe we're due for a retracement, or we're hitting a bearish higher time frame PD array while price was going higher, that's giving you a pretty strong indication that we may see some type of profit taking come very soon. And so if you see this happening and then you see a strong shift in market structure, say below this low here, you can start to really trust things in the chart a little bit more, right? In terms of, in this case, price going higher, aiming to go lower for a little bit, right? And again, you can see that we're in the lower portion. We are above the zero line, so that means we're still in a buy program overall, but we're in that lower quadrant here, right? Slightly above it for the NASDAQ, right? But you could see over here we're well above it, and you could see that it's been just a buy program nonstop, right? Just taking place, right? So yeah, hopefully that makes sense. Just a little addition, right? A little visual here and further explanation on how to use COT and what we're currently seeing in price. So we'll see if that is going to be useful for us. I'm not going to just assume and pick a top because of this. I do need to see a breakdown below this. That'll further justify that we are potentially going to dig a little deeper. Maybe it would look to try to target something like this. These are relatively equal. That's kind of a stretch for the coming week. We'll see what happens. Government shutdown and all this crap. I've been hearing a lot of big investors or big economists, right, with their education and whatnot, talking about how it seems like the things that are happening with the interest rates and the slowing job market, it's starting to have somewhat of a red flag effect for some type of crash to take place. Of course, everybody starts talking like that when price is at all-time highs because they want to pick a top. So again, we take that retail sentiment and what's being said, and then we kind of merge it into what we see in price and what we know about price. And then if things align, right, or are opposed, which is better, we could look to try to frame things around that or use that as an idea to go into the market thinking about, right? So yeah, hopefully all this stuff makes sense with the COT and what we're seeing here. We may see some type of decline take place. If there was SMT there, I would be absolutely behind us, getting in front of an early short. it doesn't mean it would have 100% worked out, but that'd be a great sign, justifying the COT. And then of course, when we look at the bonds and yields, if that is something that supports it as well, that could be something that we could use if that scenario took place, right? So yeah, with that being said, again, we're going to be on the lookout for some type of strong breakdown, right? We'll see if that comes. It's already somewhat started in the NASDAQ, but it's literally just reached into a fair value gap on the daily, which we'll talk about in a little bit. So again, we're going to have to just wait and see kind of, what's going to transpire using that daily fair value gap, right? And then of course, NFP is going to set the tone in some way. Then I think we got CPI after that, and all that stuff can be pretty significant. So yeah, hopefully that makes sense. And with that information, right, take a screenshot of this if you haven't, just to see kind of how I've structured this. So then you can start getting some back-tested data on this, and you can have data from right now relative to what's happening right now, and then get the signature that's showing, right, the pretty decent run higher with the open interest, with the sharp decline in the COT line. And then let's see what transpires given what we just talked about, right? And then save that, and you can come back and look at it. And if it does unfold where we've basically been able to get ahead of a sell-off, it'll be a good thing to have in your studies, okay? So I'll pull that back up when we get into the NASDAQ, and we'll talk about it a little bit more. And seasonality, like I've said, it's bullish, strongly bullish for October, going into November and towards the end of December, right? Because it's the Christmas rally. It's generally what happens. So we'll see if this year is going to fall in line with that. But yeah, we're not going to assume anything. We're not going to pick tops. We're going to keep going with the bullishness supported by seasonality. But keep in mind what I've just mentioned about COT as we go through this. Okay, so again, now we're moving on to the yields. Those of you that don't know, this dictates where DXY is going to go. It's opposed to what foreign currencies are doing in the indices as well. So if we want indices to go higher, and currencies to go higher, foreign currencies, we're going to want this to go lower. Right? So far, we've been talking about this going lower, continuing to push the indices higher, and that's pretty much been the case, right? We've been pretty solid in that belief, and it's paid off, that's for sure. Aside from, the chaotic price delivery that's happened every so often the last couple months. Right, so if we look at price here, so let me ask you guys this before I do anything else. What is the first thing I want to identify, or that we want to identify when we look at a chart, right? We pull it up, we look at the news, we look at some fundamentals, seasonality, COT, whatever. What is the first thing we need to look at for liquidity? What's the most important thing right now at this very moment? I'll give you guys a second. Post it in the chat. And just a reminder, for those that are looking for a process that kind of keep demanding me to give like step-by-step PDFs and all these things, it's not a knock against you guys to ask me for that, because obviously it's helpful. But just a reminder, I'm doing this every single week, step by step by step by step by step. So you got to take notes, right? Note the first thing we start with, the next thing. What I say is important, and then all the way to the end, you should have a list, right? I did the same thing with high probability and low probability conditions as well. Right, so give you guys a list, I think last week. Okay, let me see. Monthly, weekly, daily highs and lows. Absolutely. Last week, high and low. Previous, high and low. Exactly. Right? All those answers are correct. But given that we're on the monthly chart, right, relative to the time frame we're on, each time frame we go to, you have to find the current and previous and like in close proximity highs and lows, because that's where the most near-term liquidity is at. Doesn't matter about this over here, doesn't matter about this up here, these equal highs. None of that matters until we get closer, right? That may be the overall draw, and you can use that as a back-end, thing to cement your narrative, right, where it's headed. But before it does that, we still have business to attend to, right? That being the high here, right, and the low. It's inside this high and that low, okay? So again, we have this monthly low here, the current monthly low. We've started this month of October, and prices basically opened up, rallied up a little bit, but now it's declining a bit. So we got to see what it's going to do in here. And when we get down to the lower time frame, you guys hopefully remember what we have been talking. Let me actually not erase that yet. All right, so yeah, good thing you guys remember that, right? So this low, mark it off real quick for the monthly. Monthly low, I don't like the dash, wait a minute. Okay, and then we got that monthly high there. Okay, and then we got this low here, which is also a quarterly low. If we look at the 3-month chart, that's literally the low of the quarter. Okay, we have a quarterly bullish order block that was here. Okay, and then we got this one too that it came off of. This one is lower than this one. The bodies aren't, but the low of it is. So this will be this is the order block you'd use. And we could see it's beautifully respected that. Didn't even come back to the midpoint. It has, up to this point, respected this 50% level of this quarterly bullish order block. So that's why we're going to keep that on the chart, actually. And then kind of observe what it's going to do. But we are kind of still in a mess, right? Still sideways, still kind of sloppy, messy. It's the first week of the month has basically unfolded. So, we'll see, what role that's going to play in this new monthly range. But again, for now, the open price is here, right? It's always going to be a good thing also, if you guys are big on Power 3, which I encourage you to be if you're not, to mark off the open price of each month. You don't have to have all of them marked, right? Just like at the same time. But having the current one marked, it will serve you well when you're trying to do a pretty deep analysis on the monthly range, weekly, and daily range. And it helps you kind of see how each week and each day, creating that week, how that fits inside that monthly range, right? You could do it for the quarterly range too, right? When the quarter starts, the day that you see the rollover happen with the open interest, encouraging us to move to the next contract, like the rollover. If you put a open price there, or even if you put the open price right at the month that starts the new quarter, that's a good study too. That's a very long-term, large view of Power 3, and it just drives home the fact that Power 3 is constantly being used, constantly being utilized. So and then eventually you can get real comfortable with that and catch some pretty nice swings in the market, whether you participate or not. It's still good to be able to see that stuff, right? And be locked into what price is doing. You're connected to what it's doing. It's not going to fool you if you can master things like that. All right, so that's the October open. I think I'll make this one a dash line. Right, so yeah, essentially, right, we got this quarterly order block. I'm not going to make this a monthly order block. It's already a quarterly. We got the quarterly 50%, right? So price is really sensitive to that. We also have a volume imbalance. We do have a shift below this low. And we do have the respect to these wicks in here. So as long as this continues, we'll probably continue to see price behave in a heavy manner. Again, we do have to watch what happens here, though, because this could be a turning point, right? It could hit this midpoint. If it continues to fail to get through that, that's not justifying that this is willing to go lower. And then we may see this, turn a little bit. And then we'd have to obviously carry that over to the other assets like the DXY, the indices, because it will have an impact, right? But when we cut rates, this drops. The yield on the bonds or returns on like loans and stuff like that, which is, you know, somewhat what a bond kind of is, I guess. I guess that's the way you could look at it, kind of. Not necessarily, but you know, the interest on it is very similar to a loan for a bank. But when we cut rates, this should drop, which we have seen and we anticipated. Okay, and so there's another rate cut coming, if I'm not mistaken, this month. I think on Halloween. On the 29th. So yeah, they're going to most likely continue to do these rate cuts. Apparently this one has the chance of being a 50 basis point rate cut. That is significant. That is significant, and that will supercharge the indices to the buy side. Unless something crazy happens before that. You know, that's kind of going to be the expectation. Plus bullish seasonality and whatnot. So yeah, we'll keep that stuff in mind. But yeah, hopefully this stuff makes sense so far. And this will be pretty much all I'm looking at, honestly, for this monthly chart. So let's move to the weekly. We do have a fair value gap in here. I was wondering what those lines were. So yeah, this is pretty much what those lines were. It's outlining this weekly fair value gap. I think I'm going to keep this thing this color. So yeah, we want to see what it's going to do with this. Again, the thing that we outlined last week and what we were watching for was to see if this can go higher, hit some of this liquidity in here, right? Just tap back into some of these lows in here and then sweep into the weekly fair value gap. If you guys remember, I had an arrow pointing up and then down, right? To try to basically forecast this going up to go lower using this weekly fair value gap. And seems like we were pretty correct, right? We'll see, obviously, because we're inside this quarterly order block 50% level. It is acting pretty sensitive, stopping right at it. So we want to make sure we're being very cautious, because this could, if it wants to, for whatever reason, run above this high and then try to get up into these deeper levels. I don't really see that happening because of the rate cuts, and the rate cut literally affects this. Like, this is the rate. This is the rate that's being cut, right? So that's, you know, that's why I don't really see this going to the buy side really in any significant capacity. And we do got these long-term relative equal lows down here, right? And the 20, 40, 60-day cast forward, you know, we could see how we've had that displacement shift in market structure, high that's formed beyond the 20-day. We could see it's, you know, continuing to start pushing lower after it was running higher. So this was a quarterly shift, and so we'll see if it can continue to do that. Again, if this goes lower, this is continuing to push DXY lower, right? It's showing the interest that DXY needs to go lower, right? The DXY has been heavily manipulated this year because of trade and whatnot, which is why it's fell off the face of the earth. So it's probably not going to happen forever, but in the meantime, you know, that's the sentiment, and that's what we're going to potentially stick to, especially if this is going lower, right? Because currencies chase yields, right? And this is the yields for the US dollar. Same with other countries, right? They have a bond market and a yield market that you can look at for whatever currency. The currency will always chase what the yield's doing, right? Or, you know, another way you can look at it is the yields will dictate where the DXY goes, or where the currency of that country goes, you know, whichever country it is. That's just the way it works. All right, so again, that's why this is so important. That's why I spend so much time here and on the bonds, because these are literally the bloodline of what the DXY is going to do, which has obviously a direct correlation, a reverse correlation to certain assets that we trade. Right, so that's why this is so important. That's why I don't just jump to the NASDAQ or, jump to the DXY. We have to get this back end information. There's a reason that I've been able to call higher time frame narrative for the last 10 months straight and be correct pretty much on a weekly basis, quarterly basis, monthly basis. It's because we're very thorough. We don't let things slide, right? And I mean, it's just the way it is, right? High level performance requires high level process and understanding, right? How to use it and whatnot. Fundamentals is necessary. Yeah, exactly, Tony. You guys that have been here throughout the whole year so far, I'm sure you've now been brainwashed to believe this, right? Just to believe the truth, so just it is what it is. And hopefully you guys have been catching on to this stuff and being able to do it on your own. And again, if there's something that you have spotted as a weakness, these are the calls where it's good to voice those weaknesses so then we can go over it when we have some time, right? Or when we're done kind of digging through some of this stuff, right? So yeah, I encourage you guys to always ask questions as always. Again, if you guys get value from the content, definitely don't forget to like the video, subscribe to the channel. It helps me reach more people just like you, helps the channel grow. And, the bigger we get, the more impact we're going to have in the trading industry. And that's the whole goal, so your support has been greatly appreciated. I'm humbled by a lot of the things you guys have been telling me lately. And, we got a small community, right? We're just in our little corner of the internet, but those of you that have been here, you could see that we punch well above most of these people that are famous and got big followings. And we know what we're talking about. Okay. So hopefully you guys have been able to benefit from that. And again, your support is greatly appreciated. So thank you 100 times, right? The internet's massive and you guys spend time here. So that really says something. And I couldn't be more grateful. Time is a currency, right? So giving your time to someone on the internet, a lot of people don't look at it that way. They don't think about it that way. And they don't value their following, even if they have a big following in many cases. And it's unfortunate. And most of the crap these people talk about in trading wastes people's time. Unless, you're in a certain community, ICT community, right? So yeah. So does everything make sense so far from the start of the call up to now? So yeah, my opinion hasn't really changed much. I'm going to keep it pretty much focused on these elements. See if we can't take these lows out here. We got relatively good lows. That is beautiful. If we overlap this, I'm going to look at that as an inversion level. And we can very nicely look to continue to push lower. We have this wick here. So the quadrants in that, I'll let you guys go, mark that if you want to. We do have quadrants in this fair value gap here. That is something that I will map out real quick. Let me actually take these off. Make it more clean. Right, so yeah, we're gonna keep that there. And then as price breaks through these levels, we'll kind of observe, what happens around those levels. A lot of times if a high forms in that level, right, one of these quadrants, and we are bearish, you want to study that, right? You want to study when highs form, how it uses each of these levels in here. Because a lot of times if time aligns with like a kill zone and a macro, and there's like a retracement that happens and price is going lower, or it's looking like it wants to go lower, a lot of times like a fair value gap or a PD array on the lower time frame aligned with one of these quadrant levels within the proper time element can lead to some pretty significant study opportunities where you can find some amazing moves, right? So that's a gem you guys want to write down if you haven't heard that before. ICT has talked about it before, but there's so much stuff to learn when you're just learning. So hopefully that can be seen as a important thing to study. But yeah, so these equal lows, I'm going to basically leave it here with this, right? I'm going to basically look at these equal lows, see if we can't get down there. I'm going to treat this low to this high, this low to that high as a BPR. Why this one and not this one? Well, this one overtook this one, right? This is inside this range in here, so it's hitting it like it is a balanced price range, right? It's treating it as such. We've left this fair value gap open, at least for the time being. So, we'll see if that can continue. As long as this high stays intact, we may be able to see this as an intermediate term high. High reaching into a fair value gap. Lower high to the left, lower high to the right. If we go to the daily chart, I'm sure we could, see. So I'm going to see this as an intermediate term high here. Intermediate term highs, if they get violated, that turns things off, right? That would turn the downtrend off, at least until it kicks back in line with the down delivery. Something we can notice here, if we're just looking at this 30-year, we have a high here, low, high, and a failure swing. So, like I said, this, in my opinion, is going to be looked at as an intermediate term high. Why? Because we have it trading into the fair value gap, but it also has a lower high to the left, lower high to the right. So if this is in fact going to be an intermediate term high, right, if we're going to treat it as such, if we see this thing get violated, that's yet another pretty strong indication that price is not going to want to be bearish until it proves it again by displacing and giving a change in state of delivery and just really punching through PD arrays back to the downside. So yeah, this will be my overall line in the sand for bearishness. Why? Because this low to that high, like I just mentioned, should act as a BPR. We've already kind of traded into it. If it's a balanced price range, it needs to be quick and get away. It can't be breaking intermediate term highs that are available and pushing so deeply into a fair value gap. When there's a balanced price range above with a fair value gap that's available, you should expect it's going to leave things open. It's not going to try. We don't want it to trade back to the 50% of the fair value gap that's, in this case, within this low to that high, which creates a balanced price range. We don't want to see it go up there and do that. We want to see it continue to leave open those areas. If not, you may be wrong, right? That's not something you want to see. So you'd start to justify potential for price to want to go higher, right? Everything is potential. It's not guarantee. Everything's a potential, right? If something happens, right, with a PD array, that's potential. If we're, reaching through a fair value gap like this or, doing something like this, that's potential, right? And if it was to change that potential by, doing something like this, right, breaking up above this level, that potential goes away for that idea, and you have to start being flexible, going the other way, right? So yeah, just keep that in mind. Everything is potential. It's no guarantee. So getting into a trade, your mindset should be, this is a potential idea. Okay, like you need to say these things to yourself, because when you're in a trade, even if it looks like, especially when it looks super obvious, if it goes against you, it's going to hurt if you're not saying these types of things to yourself. So you got to manage expectations. There's always potential. It's not guarantee. High potential, right? That's kind of why things work out so much here, because ICT puts us in position to trade the best of the best. Right? And then if it doesn't offer it, right, and something fails like this, you're able to then be flexible, especially because this is an intermediate term high. If an intermediate term high is broken, that turns off the initial idea. In this case, if it's bearish, if we want to see it go lower, but that intermediate term high gets violated, that becomes a problem. Because if you remember with ICT's explanation of intermediate term highs and lows, when you're going in a specific direction, like in this case it's bearish, intermediate term highs, especially ones that trade into fair value gaps, should not be violated. And if they are, you're most likely wrong. Okay? I appreciate you saying that, Matthew. Have a good time at church, brother. God bless you. Yeah, you can absolutely rewatch it. You can always reach out to me too on Instagram. Make sure you join my free Discord. I go back and forth with students there too. You could DM me there as well. But yeah, God bless you, bro. Have a good time at church, and we'll connect later. But yeah, you can absolutely rewatch it, 100%. So yeah, hopefully that makes sense with the importance of intermediate term highs and lows. That's something you can add to your checklist for validation and invalidation. Okay, and it's highly effective. Okay, so yeah. All right, Matthew, I'll talk to you later, brother. So yeah, make sure you guys write that down. Intermediate term highs can be helpful in validation. So that's how we're going to use this here, okay? And again, we're going to keep tabs on this. We got a monthly low here, at least the current monthly low. We have the monthly open price here for October. So yeah, let me actually, I don't like these freaking dash lines actually. I don't like it. So yeah, we've opened up here in October and it's dropped. So, you know, we'll see what happens. Is it going to attempt to get back above it once more? Is it going to just slide completely because we've already kind of delivered a retracement, which ended up kind of closing the previous month? I guess the end of the month. September dropped in here and then capped the monthly bearish candle. Okay, so yeah, these are some of the things that we're going to watch here on this asset. Okay, I think that's pretty much it. I'm trying to think if there's anything else I'd like to talk about. This intermediate term high holding, this fair value gap continuing to hold as we've been talking about for the last couple of weeks. I mean, that completely justifies the narrative of price trying to take this quarterly low out. You know, it is kind of having, you know, somewhat of a hard time because we are inside of this fair value gap here. So again, we're going to keep tabs on that, see if that's going to cause us any problems. I would like to see a rejection here. We're at the 25% level, as you could see, within that weekly fair value gap. So we'll see if that's going to be the point in which price reacts. We also have an inversion here on the daily chart. So that's a good thing to note. All right, so we'll throw that up there too. And so yeah, from the monthly down to this daily chart, hopefully it makes sense why we would like to see price go down here, try to target these equal lows. And then what would also turn that perspective off and how we could then look to be flexible and where that would be required. And in this case, to keep it as simple as possible, seeing price reject these levels and then displace above this fractal high here. This would create a type 2 dealing range, potential reversal. Okay, high, low, high, failure swing. This would be especially powerful if we would have taken the low out here, but we didn't. So this is unfinished business, right? So keep these things in mind, okay? And line in the sand is up here. Overall perspective is to try to see this go lower unless price breaks this high up here, okay? And the draw could potentially be down here. All right, so that is our opinion for this asset. Let me actually copy, submit that to group. Yeah, hopefully you guys are getting value so far. If you are, don't forget to like the video, subscribe to the channel. Definitely does a lot for the page and the community, that's for sure. So yeah, moving on to the bonds. Hopefully the yields made sense. And so if we're looking for the yields to go lower, we want to see this do the opposite. Okay, let's actually close that up a little bit. Or yeah, if we're seeing the yields go lower, we want to see this go higher, right? So we definitely have justification to try to see that happen. Okay, we do got on this 10-year, we got this bullish order block here. which I like. We do have trend line liquidity here that's kind of interesting, so I'll keep that in mind. And then we got a quarterly low here, and then we got the buy side liquidity up there. Again, the eyeball's been up here because that's kind of been the sentiment. That has not changed. I'm gonna keep this moving like this. I'm gonna keep aiming at this. Right, we got these relative equal highs up here. That is a low resistance liquidity pool up there. Why? Because first of all, it looks like it's still going higher. Right, we're inside this monthly fair value gap. We got quadrants in that as well, so let me actually just mark that for completeness sake. 50% levels here. It's pretty deep. We've closed it in entirely. The only way that I would look for this to be bearish is if we can close below this monthly fair value gap. Otherwise, I'm going to keep wanting to see these equal highs up here, these relative equal highs get taken. Across the board, this is the idea, right? Like overall, everything is still supportive of this going to the buy side. Only way I would look to see, you know, the 5-year go lower is if we were to break down below these levels here. And looks a little bit different on the 30-year. We do have the SMT at the lows that has led to price going higher, right? So supported by the SMT. We have the run up, shift in market structure, right? Run on stops in here, order block, and that's led to us overtaking this monthly fair value gap, turning it to an inversion. So that's how I'm going to view this. So yields going lower, bonds going higher. Overall opinion is it's potentially going to be able to reach up to here because that's the largest liquidity pool up there. It's not an equal high though, but that is equal enough. And there's not really any stop hunts, so it's going to have a very easy time getting up there when it does choose to go up there. Okay. And let's just take a glance at the weekly chart. All right, again, we were looking at this last week. We wanted to see the yields go higher to go lower. That's pretty much taken place. And we wanted to see this go lower into this weekly order block, the weekly fair value gap, to then go higher. That has also taken place up to this point, and we'll see if that wants to continue. We do have trendline liquidity down here. I don't want to see that taken. I would like to see us maybe blow the highs out first, maybe just this one. Then we can get a response towards that level. We have kind of overtaken this weekly fair value gap in here. I would very much like to see us get back above that. Right, and if it respects this and then displaces below this low, again, that may set the stage for us to try to reach for something like this. I'm going to continue to be on the side that price is going to go higher though. Okay, and until we're proven otherwise, we're going to hold on to that opinion. We have this bearish order block here. Closing above the 50% of that completely takes away any interest to see price go lower, if any was present, right? Which it has not really been unless something like this was to be taken out. So yeah, yields lower, bonds higher. That's kind of what we've determined at this point with what we see in price so far. And we'll see if that can continue to be supported. We have the open price. Let me see, daily. So again, we got an open price of October here. Right, so opens there, drag that over, price dropped down below, and now we got back above it. I want to see if, once we get up above these highs up here, depending on the reaction we get, obviously that would really long term be telling me more insights. I do still believe we're going to go higher. Rate cuts will lead to this going higher, yields going lower, and then that obviously has a bullish effect on the indices, foreign currencies, bearish effect on the DXY. So that's where our head's at, and that's what we're always going to keep in mind. So unless this low gets taken out, again, we're just going to continue to want to see this go higher. Also justifying that with the lower yields with all the stuff we just talked about, okay? So yeah, hopefully all that makes sense. Don't forget to mark off the previous high and low from the week, Friday's high and low, and then the monthly high and low from the previous months, weeks, and Friday. Okay, because those are going to be your liquidity pools as we reach for the buy side, or if we break down below this, that'll put you in position to have a target down below if that was to take place. That's not the case just yet, right? And we'll determine that if it does take place, whenever that was to unfold, right? So yeah, hopefully that makes sense. Let me. Sorry, I just want to submit this real quick to the group. Bear with me for a second. Appreciate you guys. All right, now we're on the good old DXY, right? Doesn't look like a good old DXY at the moment. Looks pretty chaotic. We had an opinion that even though price got up above there, we were watching what this lower level was going to do. All right. Obviously, the rejection, not fully trusting that the buy side was going to be taken, was an absolutely wise opinion that I had, that I shared publicly. Similar to how I navigated this and was still correct, and we ended up being on the right side continuously, even in the face of this large delivery happening. Right, this went to the buy side. That was a huge wick. We were watching this high to see if it can close above it. It never did. We went to the monthly time frame. It was reaching into a monthly bearish order block, or a monthly bearish breaker right here, which we've been talking about for days. We called this whole entire move up and lower. If you go back and look at some of the videos I did from a long time ago, if you're new, we've just walked DXY like a dog all year, and it's played a significant role in how accurate we've been with the other assets. Because, again, we know what we're doing here, right? We know when to wait, we know when to push, we know when not to, so on and so forth. And in this scenario, it was a time where we were not going to assume that the narrative has now changed, because it hasn't justified that yet. The daily chart, you can kind of make an argument that there was a shift in market structure, run on stops. It was SMT with one of the indices. At their highs, they had a failure swing. It was the GBP that had the failure swing. So again, we'll see what happens in this, right? If we were to break above this fair value gap here and, turn it to a reclaimed fair value gap, this overtaking of this should act as a balanced price range now, right? If it's going to continue going lower. Same thing for when we overtake this if we were to close below it. That should be a BPR as well. As it's overtaking fair value gaps that were on the left, as we're going lower, it should be treating that as a balanced price range. So those levels should not be getting violated, right? This idea I've just mentioned is fractal. So this is another way that you can also manage trades. Like if this was, say, the 5-minute chart, and price, you entered price here for whatever reason. Maybe your model was showing up on the seconds chart or something. And let's say this is the 5-minute. Every time it breaks through a fair value gap like that, if your stop's up here and then you see it break through this one here, those are chances for you to shrink your risk a little bit, because again, if it's going to continue, these should be leaving behind balanced price ranges. Go and study this. Don't take my word for it. Don't go into this week and just start applying this. Go study this so you can trust it yourself. This is a highly effective way to basically know that your trades are protected, right, by balanced price ranges, because that's just the way it is, right? There's so many variations of BPRs. I'm in the process of making a video about it to post here to encapsulate some of them, because I mean it's so effective. It's so helpful for trusting your setup. And a lot of my private group students, we talk about BPRs all the time, and I mean it's just something you gotta go in there, study it, see it happen real time, and you'll be amazed. And ICT's never came out and made this super obvious. He's talked about BPRs here and there, but he's never mentioned that almost all of his PD arrays are balanced price ranges. That's why they hold. That's why the delivery inside those PD arrays are so dynamic and they're to be trusted. I don't know why he's never came out and just said that, but a lot of his students, like me, have figured that out, and they've talked to other charter students and whatnot, and they've also confirmed it, so yeah, it's one of those things, one of those very powerful pieces of equipment, right? Like some weapons in your arsenal that could really, really change things. There's a lot to balanced price ranges. It's not just PD arrays, but it's hopefully it makes sense with the overlapping fair value gap, because that alone is super helpful. Order blocks, breakers, mitigation blocks, all of those should be looked at as BPRs and treated as such, right? And then of course, like I said, if something like this takes place, you should not expect it to come back up to here or even back through this one if it breaks down below it. It should just continue, and then once it breaks back through it again, we may be in some trouble, right, if we're trying to force a sell, right? So again, this is a fractal idea. It happens on all time frames. You could see it very visually here, right? Overlapping fair value gap, came back down, respected the 50%. Why? Because it's a balanced price range. Changing the state of delivery also. This here is a model, okay? This here itself is a model of entry, right? Inversion fair value gap, logic behind it. We took stops, maybe hit a PD array on the higher time frame. Overlapping fair value gap, that creates a BPR. Once it returns into that BPR, right, especially after a stop hunt, which supercharges it if there's a reason to go higher. I mean, this is just absolutely bread and butter, amazing, right? So if you don't have a model that you like, or you have 2022 model and you want to add, or just simply use this as a further confirmation to whatever it is that you already do, this is an absolutely dynamic order block, inversion fair value gap, stop raid to opposing stop raid, right? And the execution is just absolutely amazing. And again, this doesn't only happen on the lower time frame, or the higher time frame happens on the lower time frame. Again, it is a mode of execution that you can use, a sequence of events that can unfold: stop hunt, order block, inversion fair value gap, return to the order block and fair value gap, or just the fair value gap, and then see price take off, right? You can have another portion of a model too for continuation, where when price gets above this, right, once it breaks above this, it's creating a type 2 dealing range as well. Some converging things in here, very advanced model that is absolutely spectacular. So hopefully that made sense and you guys can utilize the logic in one way or another. All right, I've talked about type 2 dealing ranges. I talked about this now, pointed it out. So hopefully that could be something helpful to you. We literally talked about this whole entire delivery in here. We anticipated this before it even overtook this fair value gap. If you go back and look at the videos from this time, right? I mean, we were all over it. You know what I mean? So yeah, and then when it held here, boom, we triggered in a rejection on the indices, right? So yeah, I'm going to continue to watch this, how this behaves, kind of a 50-50 shot given what we see so far. Overall, the higher time frame is still bearish, like the weekly chart. So nothing in here. If this weekly chart here was a 5-minute chart, is it screaming to you that it's going to go higher? It's a very good gauge, right, as far as whether you're going to go higher or not, right, or lower, right, depending on what's happening. What would have to happen if this was the 5-minute to get you thinking that, okay, it's probably going to turn and go higher? I personally would like to see us displace above this, right? I mean, that's a start, right? This is simply just a retracement to this order block. The 50% beautifully has held. So until that's violated, which would be 1 PD array, this high is violated, that's 2 PD arrays. Once we get up above this, that's a 3rd PD array. Right? So there's your 3 PD arrays to turn you to target something like this. And then each part of this wick becomes a target, right? In a way that you could frame price going higher without having to only solely aim for this, and you could frame setups off these quadrant levels too. right? So I'm going to continue to try to see if this can't go lower, or if it can go lower. We further justify that if we could break down below this fair value gap, and then we'll watch and see if it can invert that and then continue to try to push us to the downside. We do got an order block here, right, the up candle here, but we also have this 2-day bullish order block here that it's kind of resting inside of. Beautifully respecting that level though. So we may see in the near future, if this holds in here, that scenario unfolding where I was talking about up here. These are relatively equal highs up here. A lack of a stop hunt, right? Similar to what I was talking about in the other asset. Was it the bonds? I think it was the bonds, right? Yeah. These highs up here, the failure to take out stops to the buy side, right? So it's a very similar thing happening in here. But again, we're just going to have to wait and see what happens within this. Right now it's 50-50, right? It could, on the weekly chart still shows bearishness. Like I said, structurally it hasn't changed. The daily chart has shifted. We've taken stops. We got SMT. We've created this balanced price range down here. Technically, this high up here to the low. Whoops. Technically, this high to this low, 50% level should not be met. It shouldn't even spend too much time in here. It should act as a BPR if it's going to go higher. What I can say is if, again, we get above this inversion fair value gap and it turns into a reclaimed fair value gap and pushes away, that creates a BPR down here. So that's how we would justify continued movement attacking these this buy side liquidity pool. Otherwise, it's just going to continue to hold and then create BPRs going to the downside. Do you guys see how important balanced price ranges are? Like, I can't stress certain things enough, right? And I say certain things over and over, but it's like you want to try to grasp onto these things, because to the uninitiated, me saying a balanced price range, but then talking about all these other assets and these other things, I mean, it just goes way over their head, you know? So I hope you guys have been seeing for the last couple of weeks. I know you guys that are all on right now, you guys are, my regular suspects, right, that have been doing pretty damn amazing from what I've been able to gather from your guys' experiences. So you guys it's probably preaching to the choir, but for those that are like, it's your first time here, the BPR is so incredible. Pretty much all the things we talk about are incredible. Not perfect, but you don't have to be perfect to be incredible. But it's amazing, these things. Specifically BPRs. One of my favorite topics to talk about, one of my favorite things to utilize. I didn't start mentioning it until this year because I had to wait till some of my students got, a little bit more understanding and, went through the videos I told them to go through. So now I can, I've been slowly introducing a little bit more advanced things. And some of you guys here on YouTube have followed me for so long. So it's been kind of a similar thing as well, letting you kind of marinate with certain things, and now it just kind of fits when you talk about certain stuff. That's kind of the nature of this journey, as you're learning how to trade. There's a bunch of different components in ICT concepts that stack on top of one another, and if you try to learn, if you try to learn, like if you're just learning how to build a car, right, or the engine to a car, right, and you start with some of the basics, but then you try to jump to, diagnosing problems when you don't even know what the pieces are, right? But if you jump to advanced things, I mean, it's clearly going to be like useless, So it's the same with trading. As you're learning ICT concepts, you got to learn the basics, so then the more advanced things can be more meaningful, right? And you can know where everything fits in this puzzle we're all trying to solve, right? So that's why you don't want to jump. And that's why, as a mentor, I've had to think about that and try to do things the right way. I know what fits before what, based on what I've learned, all the stuff that I've went through. So I would be doing a disservice if for clicks and likes, I jump to specific topics. That's me trying to serve likes and views rather than actually trying to serve the student. Although that would be great for me to grow and get bigger, on my YouTube channel, right? Obviously that'd be good because I would be able to touch more people's lives. That's the whole point. But, I have to do it the right way, so, and it's just the way it is, right? I'm sure eventually the channel will get big, so, because the results are just undeniable from just the students that follow me right now. Wait till thousands of people get the same view. It's going to be thousands and thousands of more people getting impacted. Not only from me, but from those of you that I share this blessing with. And ICT is amazing. Always got to give them the credit too. But yeah, so this is my opinion on the DXY. Okay, we got the high here, got the low here. The high of the week is here. So we got relative equal high there as well. So this high and this low are going to be significant to start the week. Are we going to purge below this low? Are we going to fail to break that, then go higher? Or are we going to hold in this and continue with what I was saying is a risk, kind of fooling people that, this was potentially bottoming out, and then maybe it rips down below. I would like to see that if the yields are going to continue to drop. So because of the yield behavior, I'm going to, in the face of this, continue to try to see if we can't attack things like, this low right here, some of these quadrant levels in this wick, and then see if we can't eventually get down to here. Before we get down to there, though, we have previous day's lows here, then here. So all these levels of liquidity are more important than this low here. This may be where we gravitate to overall, but this is going to take a while to get there. Maybe it does it in a week. Maybe it does it in a couple weeks. Maybe it doesn't do it at all and just hangs in a consolidation because of the shutdown and all this chaos happening in the world. Who knows, right? It's 50-50 right now. But again, I'm going to be on the side of the yields, right? Which is in this case trying to push this lower, unless of course something changes, like this intermediate term high getting taken. Then of course, that may trigger in this to take this high and then target these highs, right? But we'll cross that bridge when we get there. But given what we see currently, this is the current Friday's low, and then we have the previous week's low. So we'll see how it treats that in the lens of Power 3 for the week this week. And the less it tries to punch lower, the more supportive it is of this level, the less likely, especially if the yields go higher, the less likely it'll be for it to go lower. But again, for now, given what we see in price and the fact that things have not changed structurally on that weekly chart, right, still in a consolidation, still favoring downside on that monthly chart, we're going to continue to try to favor downside given the yields as well and the potential for higher bond market, which we see here, okay, by us holding in this weekly fair value gap. So let me look at some questions. Could it sweep Friday's high, respect premium wick for perhaps weekly Power 3? The wick of Thursday's candle. I mean, it could always do that, right? It could sweep up above that, hold that level, then decline. Again, I'm not going to be bearish unless we I'm not going to be bullish unless we, of course, get up into this level. We are below this order block here. So the 50% of that order block, look at how perfect that delivery is. That is not an indication that price is going to go higher yet. But then again, the reason it's 50-50 is because we're trapped between this, which is a 2-day order block, and we're also trapped below this as well. So we're in between these two brick walls. One is going to have to break. And I'm going to, again, utilize the other information from the yields to try to solidify which one should or shouldn't happen, which is more likely. Even though the high probability factor is not really there because of the fact that we're in a consolidation. And we're also from this low to that high. If you take a look at that, this low to that high, we're at equilibrium. And what does equilibrium present us with? Consolidation. When we're hanging around on the daily chart and there's overlapping candles, what does that mean? We're in low probability, high resistance, plus we're at equilibrium. So you see how this stuff works all the time? Like look what we just did. How many times have I talked about equilibrium creating consolidation? Right? How many times have I talked about the overlapping candles creates low probability, harder to gauge, harder to trade environments? Many times this year. And every single time, these things have been in the chart. So hopefully this is another good example of that, and kind of shows you the importance. This is price navigation. This is conditional awareness. These are tools that help you know what's happening in price and what your decisions should be and how you should view, in this case, going into the next month or the next week, especially when there's no news and it's the start of the month, right? This type of phenomenon is very common when we start a new month, right? Or start a new week, right? A lot of times very similar things are taking place, right? So yeah, does that make sense? Hopefully this is like a review for most of you guys, because it's absolutely amazing. What the hell is... There we go. Okay, so it's the equilibrium. I'm gonna actually put what do you guys think? Should I put the red line here? Should I put the red line here like this for the equilibrium? What do you think looks cleaner? What do you think? Like, should I do this? Should I do this, or should I do this? Or should I do this? Probably this, huh? Does that look a little cleaner? Anyone that looks at this, they may not know. That's what I always think, like, oh, what about the person that doesn't really know? That's why I have a good amount of stuff on the chart a lot of times. Some people hate it, but hey, you know, trying to make sure that everybody builds that muscle memory. Yeah, I think I'll leave it like this. What do you guys think? Should I just leave equilibrium like that? It's probably clean enough, huh? And then those that hop on the call and watch the video, they'll easily understand, hopefully. Yeah, we'll just keep it like that. But yeah, so does everything make sense for the DXY? Just throw a 1 in the chat. And kind of what our expectation is. One? Okay, perfect. All right, so now that with these three assets out of the way, bonds, yields, DXY, if the DXY is going to drop lower, what should we want to see price do? Right, we're inside this monthly bullish breaker. The first thing, again, is the high and low of the current and previous candle and anything that's in close proximity. We have SMT at the lows. We have SMT at the highs. So when we have two SMTs, what do we do? Or what do we use to validate the SMT? How do we decide which one should be potentially more impactful or more useful? What do we have to do? What do we have to look at? Or what helps us with that? Okay, higher time frame order flow. Wait for more price to print. Okay, so when we have two SMTs, specifically on the currencies or on the indices, what do we have to do? What do we have to look at to validate which one's going to be the most significant? There's one thing that we got to look at, or could be three things we could look at. Let's see, you guys got any more guesses? Look at other assets. Which assets specifically? DXY is one. Okay, what about the others? What are the other two? I mean, it could be one other one, but you could look at two if you want. See, you guys remember? So yeah, DXY, Hitman got that. Right, so that's one. What the yield does, exactly. So there's two. Okay, and then of course you can add on the bonds if you want, because that also helps identify what this is going to do. It's like the X-ray view. It's the blood, the beating heart of influence that gets portrayed into these other assets, because it's just the way it is. You know, interest rates drive business. They drive many, 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 many things, right? So if you guys didn't write that down, I encourage you to take some time and do that right now. Very important. How to validate SMT if you're in an asset like the foreign currencies or the indices. Look at DXY, look at the bonds and yields. What are they telling you? And if you're in consolidation with SMT on both sides, right, it's going to give you an X-ray view most times. Unless it's just going to bounce back and forth and stay in consolidation, right? So yeah, very, very helpful tactic right there, because SMT happens all the time. First of all, you want to line time up with SMT, right? But then, like I said, if you can use the DXY bonds and yields together as well to justify which one should be more influential, and I guess higher time frame order flow is a good thing to look at too. I guess Hitman's not entirely wrong with that. So you can kind of incorporate that too. What has price been doing, right? And then add those three DXY bonds and yields against the SMTs that you're seeing, and that'll help you see which one should be more high probability than the other. Right, like this for example, bearish SMT. It did lead to a move, right? It did lead to somewhat of a small decline here on the GBP. But now we have SMT at the lows too. Inside of what? Inside of an order block. Inside of a monthly bullish breaker. Right? So these lows down here are heavily defended. Right? If you want to look at it that way. There's a lot of high resistance that's going to be required to break through to get down to these equal lows. So if it gets down there, great. Right? But the way it's going to get down there, given all the stuff that's in the way, all the price delivery that's in the way as well, it may be high resistance until it gets really close. Because if you look closely in here, it didn't completely overtake it, right? This didn't have a stop hunt. So it's technically a failure swing. So when price does choose to get down there, it may slowly in a high resistance fashion get down there. Once it's close enough, like somewhere in this area, it'll probably open up and be quick to blow out the low, right? But up to that point, you know, if this continues to hold, it's just going to continue to hold. And this up here, once price starts to, you know, really run up there, when this does get taken, if it gets taken, it's going to be low resistance, you know, because there's unfinished business up here, right? So yeah, and you can see it's just been an absolute mess. You know, it's to be expected because DXY is a mess, you know, so yeah, with that being said, I'm going to continue to want to see if this can go higher, if DXY does look to want to go lower, but again, we're going to have to see what DXY does. That'll heavily influence what we believe is going to happen here. Overall, still bullish, right? Does this look bearish? No. We're still inside a bullish breaker we've been using for the last couple weeks, last couple months at this point, right? As a stopping point. So we'll see if that continues. We got an order block here. If this month can push us up above that, it'll probably use that as support to go higher. That is supportive of the DXY going lower. And then that, as a result, is a positive thing for the indices going higher. So you can see how things start to just overlap. And as you get all these different assets understood and you understand the relationship, you start to see why this is so important for us to do all this stuff until we get to the NASDAQ and the indices, because we could then figure things out in like 2 minutes, like what it's trying to do, you know, with real data, real information of real influences that truly dictate or have a high impact on whatever this is going to do on the indices. Okay, so yeah, that is kind of my opinion for the currencies here. We'll see what happens, right? We're kind of stuck in a range, so again, we need to wait and see what DXY is going to commit to. And we should know fairly soon. Maybe it's going to wait till NFP happens because of government shutdown or whatever. So yeah, we'll kind of see. We'll see what it wants to do, right? Keep an eye on it, okay? So hopefully all that makes sense. Again, we got this low, that high, inside of this bullish order block I talked about, right? And this SMT at that order block. So, and now we're back in the middle of the range from this high to that low, right? Stop hunt, take it from this high to that low, you got equilibrium. This range is inside this high to that low. So if we do this again, we take this high to that low, we got equilibrium in here. Look at what price has done, back and forth, back and forth. It really likes that equilibrium, doesn't it? When it decides to break out from that, it's going to use this equilibrium level, right? It's going to be influential. It generally is. So that it's going to be no different here, right? So if we do break to the buy side because DXY chooses to overtake this and start to violate levels like this low, this will see a pretty strong reaction, potentially get us up to here and act as a low resistance liquidity run. Should hold, should have no issue breaking through this once it does decide to open up, especially if DXY opens up to the downside. We should not see this cause any problems. It may cause a retracement, right? It may run up there, hit it, retrace, then use something like this as well. But once it commits to getting up here, this, getting close to these highs up here should be a low resistance run. So we'll play this day by day, but that's what I would like to see. And if we lose this low here, that's going to set the stage for us to then try to target this eventually. Right? Breaking this low turns off any interest for me to want to go higher. Right? And again, we're at equilibrium, so we'll see what price wants to do. So hopefully that makes sense, and we will move on to our handy dandy indices. Okay. So with all this background information, all this back-end logic, oh wait, whoops. Let me actually go 3, 2, 3, okay. Bear with me real quick. I'm had to post that. Okay. All right, now, actually, let's start here. Let's go to gold and silver, gas and oil. So yeah, looks like what we do works in every asset, huh? I called gold, silver, gas, and oil correctly last week, targeting the sell side. Amazing. If you go back and look at what I posted last week at the start of the week, you'll see it was flawless. I talked about gold continuing to go higher. I said there may be a retracement first, overlap this fair value gap, balanced price range. Look at how beautiful that is. It's just amazing. Doesn't matter what asset. It's amazing. Crypto, whatever. It works in everything. And it's truly liberating, that's for sure. So I hope you guys see that this stuff is amazing. Damn, I didn't even know there was these equal lows down here. I called that. That would have made this even more trusted. I would have been even more behind it than I was already. It's amazing. So yeah, we'll just continue to see, right? We'll go to the daily chart. We don't got to go too high up. So we've got this wick here. We'll see if it can use these quadrants. We do got SMT between gold and silver, so that's kind of interesting. We'll see what that leads to. If DXY does continue to drop, though, again, that's absolutely amazing for this. All right, so I'm going to continue my interest to want to see this go higher. Oil and gas go lower. And yeah, we'll see, right? So we got low, high, lower low. Accumulation, manipulation, distribution. We're now looking for redistribution to potentially then try to seek even further sell side here with gas. We got a big, huge gap in there too. That's kind of interesting. So yeah, let's see if we can get that to be targeted. Have we already hit that? No. So yeah, we'll see if we can get down into that level. Okay, we'll see how it treats this low. I wouldn't be surprised if we hit it, retrace a little bit, and try to come up into this level. This here, these up candles, that's an order block. If we move up to one of these upper time frames like that, see? Order block. So yeah, it should be able to hold. Trade into it, should leave this fair value gap available, and then we'll see if we can't get price to come down to here. Right? It's a good thing. Of course, I want gas prices to go lower. That'd be wonderful, because then gas wouldn't be so damn expensive. Almost $5 a gallon here where I live. It's insane. And then again, California's always $1.60 above the average because of our leaders being a bunch of idiots that hate natural gas and oil. Yeah, it's a massive, massive gap. I'm not sure why, but it's kind of just the way it is, right? It has to fill it eventually, Tony, exactly. It's going to be fun to watch that slide down there. So, yeah. So I'm going to continue with, gold and silver to try to see if it can continue to go higher. We do got the order block here. Got the order block here on silver. So we'll see if that can continue to play a role. And of course, if it was to break down below this low, we may see a little bit deeper, but I don't really think so. Up to this point, there's so much chaos happening in the world, it's going to keep raging. It's just going to keep raging. Everybody's buying gold and silver, as they should. We're going to see at some point 5,000, 4,000 gold, 5,000. I wouldn't be surprised if we end up seeing $100 silver. It's probably a ways away, but 50 bucks is right in the crosshairs. That's an all-time high, I think. I'm not mistaken, yeah. So I'm definitely trying to look for that long term. And yeah, for my commodity traders, there you go. Chris, would you say there's reverse correlation between gold and DXY? Yes, 100%. 100%. That's part of the risk on, risk off analysis. I think ICT talks about it when he talks about commodities. I can't remember if he had a specific video. I think he kind of mixed it in a little bit. But yeah, that's part of risk on, risk off. It's just an extra confirmation you can have. I've always glanced at gold and silver and these things. I've had a lot of questions from a lot of students to add this because they're digging into risk on, risk off. I told them, hey, go look here, and they looked there. And so now there's more questions coming. So the understanding of the market grows as you look into these types of topics. And you can see how you can actually trust things versus those that are only trading one asset, that are focused on just the NASDAQ, right? You know, it's bigger than just one asset. You want to trade one, maybe two, right? Like in a different asset class, like if you trade the indices, maybe you do want to trade gold sometimes, especially in this climate. Gold's been crushing it. I mean, it's incredible what gold's been doing, and silver and gas and oil and all these commodities, because war stimulates these types of things, because supply and demand shifts. It starts to change heavily. So, you know, there's real supply and demand factors when it comes to commodities. So supply and demand is a factor, not the way that people teach, trying to rip ICT's concepts off. But overall, you know, if there's less of something with a high demand, what do you think is going to happen? The price is going to appreciate, you know. And if there's more of something, and less of a demand, the supply and demand is off. Not enough people are buying the overwhelming supply of something, so that, you know, that affects price as well, right? So yeah, there's seasonality for gold, silver, all these different assets as well. Seasonality and all that, the same type of stuff takes place. You know, commodities and seasonality are amazing. Let's just say that. But yeah, so now let's kind of put a ribbon on it. Let's go here, talk about this real quick. So, like I said, you know, we want to keep this in mind here. So we got the Dow with that signature in here pointing to us potentially looking for a decline taking place. It may be something small like this. This may be all it does, and maybe it doesn't do anything. Maybe this is just loading up for something later. You know, coming with a news event or, you know, something like that. Something is happening on the back end that is giving the data in the indices, specifically more so the Dow, which has it's a pretty good gauge as far as what, you know, all of them are going to do. Which is why ICT only has one screenshot in his 2016 stuff about seasonality and stuff like that, and he's only using the Dow. The Dow is a good indicator for this type of stuff, right? So with the Dow having this, and with us being at levels where we're at here on the COT with the NASDAQ, you know, that's enough for us to have a pretty clear indication that something may be unfolding. Right, there may be some type of a decline. Maybe this was it, right? Maybe that was it. You know, we'll have to wait and see, obviously. But yeah, with that being said, right, we're going to keep that in mind just in case we were to like overlap this fair value gap and really start to attack this low. It'll have been justified that anticipation was something that we had to consider. Right, and then if it happens while we've been considering this, you could then look to trust it when you're trying to get in there and take a trade to the downside, right? Assuming that something gets justified, right? That's not the case just yet. Okay. Wait, what the hell just happened? So yeah, looking at this weekly chart, here, let me take some of the annotations off. Looking at the weekly chart, we're just absolutely raging higher, right? We have a wick down here, so the 50% of that, we don't want to see it trade through that if it is going to utilize that as something important and continue to push higher. The weekly high, weekly low, weekly high, weekly low, those are our liquidity pools, okay, for the next week. So with that being said, that's this low here and this high. We also have these consecutive down candles. If we go to the 2-day chart, you could see that. We got that wick right there, so that's probably going to be useful. We have this high, that low. It did take out liquidity down here. So this up candle, we're going to definitely want to watch. It's also a bullish order block on that weekly chart, remember? We just looked at it as an indecision candle, but nonetheless, you know, this high to that low should act as a BPR. It should not have to come down into the midpoint. If it does, that's telling you that this trendline liquidity may be what's on the menu, right? And whatever other PD arrays that can align with that, those things would be on the menu if that was to take place and overlap this. Because then we'll have inverted fair value gap. We'll have one PD array, 2, 3 PD arrays being violated once it closes below this. And then if that happens with the COT on the back end showing that there's a bearish signature taking place, that's now supercharged. And we're, again, highly likely to try to dig deeper into some of these lower levels. Again, that's not what's taking place yet. We need to wait, right? Otherwise, we're going to continue to want to see price go to the buy side. Remember, it takes a lot for us to change our narrative because things move very slowly like a big-ass ship in the sea. They can't turn instantly like a Ferrari does, right? And just, hit the corner quick. No, it takes time. It takes like sometimes a week for a ship to turn. A big, massive cruise ship, right? It takes a couple days. A warship takes, longer than just a day, right? Or a fast time horizon. It takes time. And in this case, the ship turns completely when we see 3 PD arrays getting violated. When we see things agreeing together that one direction is over with, right? With like other assets proving it, and of course, like I said, inverted PD arrays and breaking things like this low or multiple fractal lows, right? That's one way to also look at it too. So yeah. So I'm going to be watching what this does, right? We got this high here. Like I said, that's an order block. It's also a large wick. And then we also have these consecutive candles that took out this sell side liquidity that can be dragged over as a potential bullish breaker. We can just simply use this gap in here and this high to that low. That's enough, right? If it violates that, this is just kind of in confluence with that. Okay, and then we could see this as a shift if that was to unfold. We got a big wick here, so we'll see how that behaves. We got this up candle. It's creating a bullish breaker. We got this up candle too. Very similar thing. We could just simply use this inversion fair value gap and this fair value gap in here. Also the high. And the wick, right? We don't want to see the 50% of this wick getting taken. You just saw me highlight this. So we do see an SMT here happening. Not sure if that's on. Yeah, it is. So it's on this time frame too. So we've got SMT here. That makes me feel like this level should be able to be supported. So again, unless it overtakes this and disrespects this wick 50%, disrespects this fair value gap in here and closes below it and inverts it, I'm going to just be classifying this as a simple retracement that's then going to try to go higher, right? And again, if these break, if price trades through it and then inverts it, I need to see the reaction from that to confirm that, okay, now we're going to look to go lower. So it would have to invert this and then respond to it going lower for me to really get behind a sell idea. Because we're at all-time highs, we need to wait. We need to allow this type of stuff to take place. It's just a good example of how we wait for our narrative to get disrespected and what we're waiting for. 3 PD arrays, levels like this turning into an inversion, other assets, the bonds, yields, DXY helping confirm that, maybe even the currency, the foreign currencies, right? So if they start to justify it and then we get something like this, you could just start to see, okay, now we're stacking confluence in the other direction. So now we can reliably believe that the narrative has now shifted. Otherwise, we stick to the narrative, right? Nothing has, if this was the 5-minute chart, it's a wonderful filter. If this was the 5-minute, what would have to happen for you to be bearish? Or to feel like it was bearish, right? Or make it look like it was going to be bearish. It would have to break through things like this. Otherwise, this is just a retracement, optimal trade entry, a fair value gap that's probably going to continue, right? Balanced price range with this wick. That's another reason why I don't want to see this thing get violated. Because this high to that low is also a BPR because it's an order block. But this wick overlapping majority of this, that's also a BPR. So it should leave a portion of this open, which it has so far, I would have preferred to see it leave more open and just fill like this with a small wick. But, you know, we're still closing within that little tiny range that fills in this right here, this high to that low, right? That's a fair value gap, right? This right here, this is an important topic right here, by the way. This is a fair value gap, okay? This whole range is a SIBI, okay? Or a BISI, buy side imbalance, sell side inefficiency. The level that's not balanced out or retraded to, that is generally when that is the fair value gap portion that you're trying to look for when fair value gaps fill, especially if there's an overtaking wick, because that basically traded buy side, sell side, so it's not inefficient in buy side or sell side down here, but it is inefficient to the sell side here because there's no trading through it. Okay, ICT talked about this in I think it was a 2024 video. I can't remember. I mean, he's talked about it multiple times over the years, but I think he specifically publicly on YouTube highlighted it, I think in 2024. I have to go double check. But yeah, this is something he specifically pointed out. So for those that trade fair value gaps, maybe you didn't know what I just mentioned, right? But this also has to do with balanced price range understanding as well. So you could see how things overlap and dovetail, and most of the people on the internet, you could tell just off what I just said right here, most of them don't know what the hell they're talking about, right? They sound like it. They try to sound like it to the uninitiated. But to someone like me, someone like you guys, I mean, you could figure out who's a fraud pretty quickly, right? It's by simple things like this. All right, so again, we're just going to see how this is going to behave. Here, let me throw on this little, right, this little line everybody likes to put. And so we'll see if we can do this. All right, I'd like to see this be left open. Let me actually, what is that? I think that's the wick. Yeah, I don't know why the hell it was off a little bit. Let me actually, why does it look like, oh, the fair value gap had me fooled. So yeah, we'll see what happens with this. This is what I want to see though, okay? So we dropped lower. We want to now look and observe how this is going to behave in here too, okay? It's an order block. Let's see, do I have any of that on here? Where the hell is it? Wait a minute, what the hell's going on with that? Give me 1 second. I don't know what the hell. Why is this glitching out on me right now? Okay. I don't know what the hell is going on. Alright, let me kind of clean this up. Yeah, does everything make sense so far, everyone? Freaking hungry. My stomach is yelling at me right now. What the hell's happening? Okay, Tyler said it does. Fred said it does. Hitman does. Okay. Visual consolidation. Let me see. Is hourly chart starting on market maker sell model for NAS? I think it already delivered a market maker sell model here. I don't believe that market maker sell model will work out until it disrespects these things from the higher time frame that confirm that that's even something worth considering, because it'll fool you. Because if the higher time frame daily chart doesn't agree, you may see that there may be a market maker sell model, but it's not reliable yet because it goes against the parent time frame, which is a daily chart. Right? This retracement in here, unless it violates these levels of invalidation we talked about, I wouldn't even consider it. And even if it does work out like that, and then we later on are able to get in line with it in the latter portions of the market maker sell model, that's still the best area to get involved anyway at the second stage distribution, which would be down here. But yeah, we're gonna see. Like I said, we're gonna see what price is gonna want to do here with this. Got this fair value gap. But yeah, it's a good thing to consider, Fritz. It just has to do something on this higher time frame first. Disrespect, because thinking of a market maker sell model on the 1 hour going into the new week, while price is here, right? Again, if this was the 5 minute on this daily chart, right? Say this daily chart was a 5 minute. Would this be bearish to you? Would this be market maker sell model? Maybe it eventually turns into it, but it's kind of it would be jumping the gun a little bit if we were to try to jump ahead of it like that. Okay, so yeah, that's not a bad thing though. Don't let what I just said make you feel like, oh, well, I probably shouldn't think about it. No, that's exactly how you want to think about things. Any type of retracement that goes against a run higher, you're trying to think of market maker sell model. If we're bullish on the higher time frame, though, you want to expect it to fail or be a very short-term market maker model, not to get down to here, but just to get down below something in close proximity. And then once it sweeps out one of those liquidity pools or reaches into like a PD array like this, you want to consider that as a potential smart money reversal area. And then as it looks to turn around again, if the reaction confirms that, Now you're in a market maker buy model targeting the external range liquidity. Internal range retracement looked at from the lens of a market maker sell model just to set up the daily chart going higher still. Once it reacts again, you go from market maker sell to market maker buy model, market maker sell model, market maker buy model, right? And as we break highs and retrace, you're going market maker buy model to market maker sell model, market maker buy model to market maker sell model. We are always, like I've said before, always in a market maker model of some kind, buy or sell program of some kind. And that's why this is so important. That's why I use this. A big part of this logic here has to do with understanding market maker buy and sell programs, right? Larger time frame ones, right? Larger time frame ones to shorter time frame ones. Right? If you can understand the larger view you're in, you know which models you should be able to trust, buy or sell models. You know, and once you get more advanced, right? Once you get a lot of experience under your belt using these concepts and looking at things the exact way that we look at them, you're able to trade both. Retracements going lower, market maker sell model. If it fails, great. Market maker buy model, and I'm back in line with the higher time frame. Half risk on the market maker sell models going against the higher time frame bullishness. Normal risk when you can identify that we're back in line with the market maker buy model, reacting from a higher time frame PD array that potentially created the smart money reversal. Right? Another way you could look at it too is every up candle, think market maker buy model. Right? Every down candle, think market maker sell model. Right? Because it has to go higher to go lower. Right? Consolidation. Right? Manipulation above, distribution down for a down candle. Market maker sell model, right? Because look at, let me draw this out real quick and then we'll call it a day. Hopefully you guys understand what our opinion is here. This is what we're going to watch. If it breaks through this daily fair value gap, that's when we're going to potentially have to think about adjusting. But if it doesn't, we're just going to continue to push this higher. Okay? Yeah, let me pull up this little drawing tool. Let me go to the 30-minute real quick. So if you think about it, sure, I don't like that. Let me go to 1 minute. It's gonna be more flexible here. Yeah. Okay. Oh, that was a fail. Okay. Okay, so this here. This thing is not cooperating. I don't know why they don't let me. Why they don't let it be a little bit flexible? Like this thing just like. Is there a way I could fix that? I think there is. I forgot how to make it so it's not so sticky. All right. Anyway. Just finish this real quick. Okay. So this here, whoa. So this here, we're going to look at this. This is our market maker sell model. Okay. This is a really good perspective to have, you guys. Okay. So we see this as our market maker sell model, right? Let's finish kind of drawing some of this real quick. Just bear with me. It's going to be something really, really good for you guys. Okay. Okay, so this here, crude depiction of a market maker sell model, right? Well, if you take this and you think of power of 3, right? This is the market maker sell model, and then we'll note something that has to do with power 3. So accumulation, manipulation, distribution, right? They look pretty similar, don't they? So this is a basic view of just the different elements: accumulation, manipulation, distribution. Within this little area in here, right, this may be happening, right? So the open price, let's just say open price could be here, right? Accumulation, manipulation, distribution. It may look like this on, say, the 1 hour, right? But when you drop down to like the 5 minute or the 1 minute, you may be seeing this take place, okay? So like this in here, let's say that it's right here. This is like the 1 hour or 15 minute or 4 hour. But this is what you see on the lower time frame, right? This is the daily open price in here. Okay? So the market maker models and power 3, they merge very, very, very well together. Pretty much the same thing. It's just a market maker model. If you're like this is for like the specifically the daily power 3. You can use it for the weekly power 3 as well. But this perspective, meshing Power 3 and market maker models together, kind of knocks two things out at once. And it shows you how they can work within each other, right, as a framework, right? And then market maker models for the daily ranges, right? You could see the start, right, in London, right? If we're looking to short and we're looking for a market maker sell model or a price to go higher, to go lower, right? This up here, you could look at this as a higher time frame PD array. Maybe like a 1 hour, right? Like a 1 hour FVG or something, or a daily FVG, right? Or previous day's high, or previous week's high, right? Or previous month's high, right? Or a daily order block, 4 hour order block, right? Whatever the draw could be, if you're looking for price to go higher, to go lower. Once it hits this level, right, you're thinking Power 3 right away, but within Power 3, you now want to consider also trying to add the market maker framework, market maker model framework. And of course, I've mentioned this before as well, right? Inside each of the phases, I promise I'll talk about this and then I'll let you guys go. Right? I've mentioned this before. I mean, you know, even up in here too, it could be the same thing. But in each of these phases in here, lower to go higher, what do you think? Say this was the 5-minute chart, or say let's establish that let's say this is the 1 hour. Okay, you see a 1 hour chart creating a market maker sell model within like a daily bullish candle so far, reaching up to one of these levels. Right, so the 1 hour chart is showing you these little, you could see the phases pretty clearly, right? Or maybe the 15-minute, right? Inside each of these phases, when it goes lower to go higher, if you zoom in on the lower time frame and you look at the details in here, what is this creating like on the left side? And then what is it creating on the right side? Can you guys tell me in the chat? Within this larger market maker sell model, what is being created in here as well? How can we look at each of these, right? What kind of logic can we use or just assume should be there as price is going higher, but then also as it goes lower? Let me see, can you guys give me a guess? Market maker buy model on the left, market maker sell model on the right. Somebody's been paying attention. Right? So I got another thing I want to add to this, since you guys understand that. I'm glad that you guys' attention is on that and that makes sense. So I got another thing now. So we talked about the 1 hour, right? We're talking about the daily range, right? So now if we're on the weekly, okay? If we're on the weekly chart, right? Sometimes, a lot of the time. See, it's gonna fit. Right, if we're on the weekly chart, yeah, Power 3 is real. It's so much more deep than people understand. People say, oh, I learned Power 3, blah, blah. Did you really? Did you really? If you learned Power 3 and you weren't able, and you're learning market maker models and you weren't able to piece these two things together, did you really? Right? Maybe you just weren't introduced to it, or you just didn't really pull that correlation together. But every single concept, even if you feel you've learned it, it can go much deeper than you even can imagine. You know, this stuff is deep. It's not surface level information. Like, this is like an algorithm that we're dissecting, that's printing price, that fortunately has been given to us in a language that's understandable for a normal human being that isn't in the tech world, right? Am I my freaking stomach has been screaming at me for the last 5 minutes. So I got to get some food soon. But, you know, Sunday, Sunday, Monday, Tuesday, Wednesday, Thursday. Let's actually just like kind of encapsulate Sunday and Monday. How about that? So let's just say this is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Okay? Oh. Right, so Sunday, Monday, consolidation, manipulation. Tuesday, Wednesday, high or low, right? But in this case, the high of the week, and distribution. Thursday, unless a PD array was met. Right, this is the open price, but let's just say there's, actually, let me not merge those things together. Let's just say that there was a fair value gap here. So it went lower like this. You say it went lower like this, and it stopped right before it hit the fair value gap that's down here, hypothetically. Right? This is how you want to also look at Power 3 from a weekly delivery perspective. This would be what your 1 hour chart would look like for the most part. 1 hour is the best time frame to view a weekly range, all the different components, consolidation, manipulation, distribution, and then we got the reversal, right? Or the cap of the weekly range. Sometimes it'll look like this, right? Sometimes the previous week will end here, creating a consolidation. And then we'll start the week with something like this, right? And then you may just see, you may see something that started the previous week start to unfold even further going into the next week, right? So you're not always going to start at the original consolidation down here. You want to be able to observe it, right? But sometimes, the previous week may have already consolidated, and then we may quickly start to move. Like this is a good scenario here when Monday and Sunday are fast, right? Like say it's really in a hurry to get up to a level like this. Like we've seen this multiple times too. We've talked about it over and over, right? But this could be a scenario where Sunday and Monday were really quick, and then they reach fast into a PD array up here, and then all of a sudden it starts to take off, going aggressively against the early fast movement. So this is some scenarios. This is a scenario you could think of when you're thinking about market maker models, when you're thinking of Power 3 together as a whole. And you could start to see, hopefully, that, you can get real in tuned and real comfortable with how price delivers, how it operates, right? And the part that Power 3 and market maker models play in the overall delivery on a day-to-day basis, right? It doesn't always have to be seen when you start a week from these areas, right? It could be damn near over here, right? The whole week may have previously retraced all the way up, right? And we're in that larger market maker sell model that then starts to complete over here, but then delivers a distribution candle, right? Still could do Power 3 on this side over here, right? Yeah, think about this. Every single level on the left side that gets overtaken in a market maker sell model, everything on the left side, once it violates it, should be classified as a BPR. Once it completes the full market maker model, that whole entire range becomes a balanced price range. And unless price is going to turn around entirely, we should see very little reaction, right? Think about it like this too. This is another really good visual to think about. Say this is the 1 hour chart, but this was like a couple of days, right? It's a very, very, very good visual right here for you guys to see. I think I posted something like this the other day. Whoops. Right, like this is what the larger time frames are going to look like, right? Versus the 1 hour. Okay? Super uneven candles. Sorry about that. I'm not necessarily the most artistic individual. But hopefully you guys are getting the concept, right? Like a wick would be up here, or maybe it's a small wick in here, or maybe it's like a small wick on this day, right? But then this candle over here, right? Mind you, all throughout this, we're creating market maker models to the buy side and then market maker models to the sell side. Power 3 to the upside on these bullish candles, bullish power 3 in these down candles as well to the downside, bearish power 3. But that could be within a larger, maybe this is what the daily chart looks like. But then you go to the weekly chart, right? And then the weekly chart just looks like, let's say the opens right here, right? So the opens right here. But then the weekly chart just looks like this, like a big giant wick. And the weekly candle ends up looking like this, right? Whoa. Right, reaching down into a weekly fair value gap. You guys kind of see what I'm talking about here? How I just pieced all these things together and how they operate together, and how you look at it from like a 1 hour perspective, and the market maker models, and breaking them down, to little ones inside of the bigger ones, and then how that lower time frame looks on the higher time frame potentially, like the scenario. Great illustration. Okay. Beautiful. Wonder if the big red folder throughout the month, the folders throughout the month potentially set up phases. Fritz, let me tell you, you're onto something. Me and one of my students named Mark, his name is Bullfrog in the chat, in the group. If you guys, if any of you guys do end up joining later, he's a spectacular individual. But he's a computer coder, and he's just someone that's been with me for 3 years. He started talking about the role of NFP and CPI and how that plays, like how it plays inside of the monthly range. What influence does it have? What part does the news play within that, right? So that's a study that I encourage you to go do, that's for sure. Right? That is absolutely for sure. You're definitely onto something. Okay? So yeah, hopefully you guys got value from today. I definitely wanted to stick this little gem in. Of course, you guys stayed throughout, so you guys have gotten the powerful gem. That's what we just talked about is absolutely unmatched. I mean, it's incredible what we just talked about. It's literally amazing. But yeah, so hopefully you guys got value today. Thanks again for all the support, always showing up, always taking this stuff serious. You're only going to have a serious career if you take this serious. And, it's not for the weak. It's not for people that are unwilling to change. It's not for people that, just refuse to put in the work, refuse to sacrifice. Every great thing took a sacrifice for whoever succeeded in that field. They had to make a sacrifice. So yeah, hopefully it's made sense. If you guys got any questions, let me know. Again, thank you for the support. Don't forget to like the video, subscribe to the channel. If you guys know any friends that trade or anyone on the internet that you're cool with, and they want to be around some like a community and some people that are really serious, definitely do me a favor. Put the word in, right? If you feel inclined to do so, if you've gotten value from being here, word of mouth is a lot better than me running ads to a bunch of random people on the internet, who are probably signal junkies at the end of the day. The algorithm on YouTube probably just will put that type of thing in front of those kind of people. Nothing against those types of people, but this community, I want this community itself to be an asset, not just me. I want to build people up so then they can go out, and change lives as well. I feel like the impact will be a lot further, similar to what ICT has done. He gave all this stuff, he's created monsters, and now, there's so many students that are very, very, very helpful and, wise with this stuff and do very well. And as a result, more and more and more people are starting to thrive and become, absolutely amazing in this industry. So hopefully we could play a role in that, and you guys can help us all play a role in that. And again, thank you guys so much for let me see, for your support. Because how do we confirm no access on Discord? Don't want to get so Fritz, you want to let me actually pull that up. And Fritz, you're always on with me, so I wouldn't kick you. It's just the verify. Let me see. See real quick. See. Where is it? Oh, right there. There it is. Okay, so you'll come and click on verify. Yeah, you see all the people here. Lots of people that just haven't simply went to the verify button and clicked it. Right? You click verify, and then it gives you a role, and then it's very simple, and it opens up all the things here in the free group. Of course, I have my private group, but I do share a lot here and in that group. Matter of fact, those of you that are here, I think some of you guys are here from my private group. Mike, I think a couple others. If you guys need one-on-ones today, let me know. If you need one-on-ones throughout the week, at least Monday, Tuesday, Wednesday, I should be available. I do have to see my daughter on Mondays and Tuesdays, so that's kind of the restraint, but we could probably work something out if needed. So yeah, just let me know. Those of you that are in the free group, obviously, we'll be live again on Tuesday. Of course, I'll be in and out on the free Discord, sending out my thoughts and different things. And then, of course, you guys can always send me questions, and I can get to it whenever I have some time. If I'm not, busy doing these other things. But I always try to get back in and give you guys some answers to whatever it is that you guys struggle with, because you guys are part of the family too. Yeah. So with that being said, God bless you guys. Again, those of you in my private group, just send me a DM if you guys need a one-on-one today. I'll let you know what a good time would be if it fits. Pretty much all day I should be free. So, and then again, those of you that are here, part of the YouTube family and part of the free Discord, God bless you guys. Let me know if you have any questions. Hopefully you guys got value today. Don't forget to like the video, subscribe to the channel. And yeah, with that being said, have a good rest of your weekend. And I will talk to you guys on the next one. And all you guys are welcome, by the way. Appreciate the support and appreciation.